今天吧，I think that the main topics I was thinking about, what could be interesting to this group, with the current market condition. I think there are some real experts here, talking just right before this. There were the discussion on stock market and so on. I will touch on the stock market as well as the overall funding, from the fundraise perspective, what the market looks like. I have worked on various different types of investment, fundraise, right? So from Series A all the way to pre-IPO, and also gone through led an IPO process successfully. We also have done a lot of debt, convertible debt after the company became public. So very happy to share different types of investors and different funding stages. What could be the takeaways, and then finally some of the key considerations. A brief intro of myself. I was born and raised in China, so went to Beijing University of Aeronautics and Astronautics. So I graduated there in college and came to Northwestern for grad school in computer engineering and electrical engineering. And after that, I went to University of Chicago for MBA. So kind of a good combination of tech and some of the business foundation. So from the professional experience, I started with Motorola because I lived in Chicago for 20 years. So as you can imagine, Motorola was headquartered there. So spent almost 10 years at Motorola. And the great thing of starting with a large company is they provide you a lot of opportunities to rotate. So it's very lucky that the company actually funded me for my MBA program. And during that process, I was able to rotate in different sectors, right? We call it sectors, but essentially it's different businesses. So I was able to work in semiconductor, working in, the handset division, the cell phone division, so all different divisions that learn the market, learn product, and learn different aspects. So I was able to rotate in operations, in finance, strategy, business development. So as I was doing all of these rotation, it gave me a great foundation of different types of roles, how the business comes together. And that really kind of further helped me to make the decision to take finance as my future career. So then since then, I joined GoGo. I joined GoGo as leading their FP&A. And GoGo, I don't know if you guys are aware, it's an in-flight internet business, and it was subsequently acquired by Intelsat, and it's now part of the larger satellite companies. But initially, when it started, about 2006 was when I joined them, and essentially it was pre-revenue. So the commercial side was pre-revenue. So I stayed with the company for about 9 years. So we really have seen the company grew into a $600 million revenue company and went public in 2013. So it was I would say that 9 years of journey really changed my career and changed me as a person, both professionally and personally. It was like 9 years of, to some degree, very intensive work experience, but at the same time, I've seen a lot, right? We have done $1 billion of fundraise just with that one company alone. So, we started with private equity. We did debt financing with Tannenbaum and Guggenheim, which is one of the major institution. And we did IPO in 2013, and we did $300 million of convertible debt after the company went public. Subsequently, all the future roles were primarily CFO roles. So, I have done Series B for FourKites, Series E for Dynamic Signal. Series A I was an advisor for that company. So I was able to advise them through their Series A round and be able to raise $25 million for their Series A. It was a large round for Series A. And my current company is Bird Eye. So I'm currently CFO of Bird Eye. It's a pre-IPO company. We have more than $100 million of ARR currently, and company is profitable. So this company is doing very well. Hopefully the market will do well and give us an opportunity to get ready for the next steps. So that's kind of the funding experience I had, and really love to share with this group. Let me know how I can be helpful. So as you guys all have seen that the market rallied after the election, and we have seen that it's essentially the best week, right? This past week, in almost a year time frame. And Q3 consumer spending and retail were also very strong. We have seen that 3.7% growth in Q3, which is also was a very much of a record since the beginning of 2023. There is also the expectation of further reduction in from the interest rate perspective, right? So there's the market expectation that's going to continue, which is to some degree a boost from the investors' confidence and overall market sentiment. But there's also uncertainties. There are, definitely uncertainties continues to remain. The geopolitical concerns, right? The Russian-Ukraine that conflict is still there, and there are the climate concerns. There are, from the AI perspective, how would AI impact various different industries? The economic growth has been slow. This year we expect that GDP would grow at about 2.7%, but next year the expectation was actually somewhere between 1.5 to 2%. That's kind of the current expectation. But how strong can we push the market to continue to grow next year? That remains to be questionable. But there are some uncertainties still looming that could have potential impact to next year's market. From the VC funding perspective, you guys have, I'm sure, have been following some of the VC market, right? 2021, 2022 were records. It almost doubled comparing to pre-pandemic. And in the past 2 years, it has come down to almost half of that level, right? And we have seen this year, by the end of, this is the chart here is by the end of June this year. But essentially, by the end of Q3, we have seen 2024 is trending towards the same trend as 2023. So essentially ending at about around $80 billion of investment from the VC funding. So we also have seen a second half of 2014 have started to trending up. The market started to, there's also some positive trends on exit activities. The IPO market, which I pay a lot of attention to, and has been slow this year. There, even comparing to last year, there were a few larger exits, right? Larger IPOs, but this year has been slow, and so that's kind of love to see the IPO market open. From all the industries, as you guys all know, that AI has been really a hot, kind of a hot area of investment. Healthcare and financial services also, is a good positive trend. So we'd like to go through, as you think about a startup's journey, what are the types of investors could be helpful to startups? So I think, I'm not sure if you guys have, how many of you have been leading startups or kind of our founders, but essentially there are incubators, right? It's very early stage, even prior to business model, even prior to full product market fit. So that's very early stage. And you have seen that the incubators could be funded by, financial institutions, or could be funded by investors. Like some of the investors would be interested in, right? Y Combinator, they provide incubator services, and also by colleges, universities, right? Some of the universities, they do provide incubator programs as well, even by government. So there's certainly funding coming from this funding source, but a lot of times they are actually providing the mentorship. They don't necessarily provide funding, or they have good network to connect the startups with the investors. So that's kind of generally the role they play. Similarly, accelerator is a little later stage. They generally wait for there's some level of product availability, or there is some level of understanding of business models. So, so these are pre-seed stage essentially. And then you get into the angel investor, where it's kind of the seed stage. So, there are many different sources of the very initial phase, right? It could be families and friends, and it could be like, you have a certain investor willing to put in investment. There could be some successful entrepreneurs, right? Like I know that friends of mine who have gotten investment from the founder of Zoom, Eric Yuan, who has funded quite a few startups and just use his own money. So that could be like angel investors, right? These were different sources of angel investors. And when it gets to the business becomes large enough, like $2 to $5 million of valuation, then you could start seeking more formal round of venture capital investment. So generally, venture capital would cover from Series A to all the way to pre-IPO. And so, the types of, they invest in exchange for ownership, a part of the ownership within the company. So, I've worked with various venture capital firms, and you guys all know the street, Sand Hill Road is where, a lot of venture investors kind of, where they meet with the startups and so on. Would love to kind of share the difference between these different investors in the next slide, but generally they are looking for growth, right? They are looking for like blockbuster type of investments. They generally looking for, from 10, 20 investment. Ideally, there are some really high growth, and then the ones that can really hit, the success, and then the others that they accept that taking the risk of certain investment, especially early stage, right? Especially the A round, that they're expecting that there could be risks, and then there could be failure for those investments. So private equity, generally they invest in much later stage. And most of the private equity firms, they are really aiming for more of like an EBITDA play. There are, a combination, one of our current investors, Excel KKR, they are actually a combination private equity, growth equity, and so on. So, there are certain private equity looking for growth, funding growth, but a lot of them also are looking at like a more mature company where they can, they essentially are looking for EBITDA play, right? They are certain companies that they are relatively mature, and they are looking for like, maybe the growth rate has slowed down, to 10, 15%, but there is a likelihood that you will be able to, just through improving cost efficiency, improving operational efficiency, you could potentially have, it becomes a cash cow. So it becomes like where they can reap a lot of EBITDA, right? It's a very positive cash flow. So they may have a very different investment philosophy comparing to venture capital. And obviously there's also debt financing, like, through banks or certain financial institutions. I've worked with various debt investors in the past. And there's always like, you guys know the structure, right? Very early on, there could be venture debt. So SVB, unfortunately, has gone through a really, big setback a couple years ago, but they used to be funding a lot of startups. And, there are others as well. That similar regional banks will fund for venture debt, which is essentially gives you like 3 to 5 million of runway, right, for you to kind of before funding rounds, and you don't want to dilute, and then using some venture debt can help you to bridge between multiple different funding rounds. And larger investors who are willing to take. So generally, venture debt is very affordable. It's less than 5% interest rate. At least historically has been. Maybe the recent couple of years also have been a bit challenging. But the larger debt financing requires a lot more diligence, and the interest rate will generally be higher because those are a lot more stable. Financial institutions that are looking for a more reasonable payback. Any questions on the type of investors? 哦，可能。好的，好的。这边也有，我们这是有几个，有一些 angel investor。好的。So I think just talking about the financing process, right? So it's very interesting that despite of different stages or different size of the startup, the the process to some degree has a lot of similarity. Maybe it's just at different scale, different level of maturity, but you first of all need to tell your story. So you always need to figure out what's the problem you are trying to solve, why you came up, how did you come up with this business idea? And a lot of times, because in the Valley, you can see that, most of the successful CEOs, they are founders. Why, the investors prefer founder CEO is because the level of passion and, the level of drive and, during the tough times, because most of the time, I don't know if you guys read the book Hard Thing About Hard Things, by Ben Horowitz, the founder of A16Z, which is very reputable venture capital firm. And essentially he said, right, it's a grueling 10-year journey for any successful startup. Kind of go through that journey, the ups and downs. So the founders have that level of resilience, and their passion will carry them through. So so essentially, a lot of the founders' personal story, why they started this business, also can be a very attractive story for the investors. And then the next step is essentially think about the pitch deck, right? How are you going to structure your story? Like, you obviously have some qualitative story, but then how are you going to structure it in a way that it is attractive to the investors? So you will start with the market, like what is the industry you plan to play in and what the TAM looks like. It's very interesting, like we talked about these two types of investors, venture capital and private equity. Venture capital are looking for growth. They're not going to invest in a company that, less than $10 billion of TAM. So essentially, for them, that, the growth is key, right? Not only today's growth, generally the early stage, they expect a double, triple, right? You say that and triple, double, double is a successful software company, that kind of the journey they expect to go to get to $100 million. So, but private equity is looking for, they don't have to have that kind of criteria. And some of the private equity firms, especially the ones that invest in smaller early stage, they are willing to take companies that have less than $10 billion, and they are looking for a niche. As long as you are a company could be successful, could be sustaining it, and have good economics, they are interested as well. So these are two different paths. Like when you are thinking about investors, those are things that you should consider. And from the after you identify, here's my market, here's the, the TAM, and then you need to say what the problem you are trying to solve and why is it a pain point? Why is it a pain point for the industry? Why is the pain point for a particular market and so on? So you identify the pain points, and then you certainly need to tell the story of how your product can solve that pain. And the later stage you go, the more product market fit they're looking for, right? An earlier stage that you are still testing your product, and then they are looking for a certain validation point from the customer perspective. But when you get to more later stage, they are looking for a lot more validation from the market perspective. What is the product market fit? Are you able to prove it? Are you able to sustain your customers? Do you have high retention from your acquired customers? So all of these questions becomes a lot more, I would say, like more center place, right? When it's talking, when it gets to later stage fundraise. Financials is, I guess it also depends on the stage. Generally, you should, even for Series A, you still should have a clear business model. How do you expect that, you need to build like a 3 to 5 year projection. You need to kind of be able to articulate what are the business drivers. why these business drivers could potentially sustain your growth. So those are all critical perspectives, right? From the financial perspective. And then the investment thesis, like generally the thesis would be like, a successful or productive thesis could be, we have a large TAM, our product has great product market fit, and these are the proven customers that has been with us for the past 2-3 years, that has been growing with us, and we are able to sustain with competition, and please invest. So those are like essentially you just need to summarize. These are the few points why you think the investor could be interested in you, and why you are confident that you will give them a good payback. So those are the key components. I think I should add the competition as well. Generally, you would want to talk about competition in this agenda. So when you talk about target investors, right, after you think about, okay, what is your framework? What is your pitch? What is your business model? What is the competition? And how do I articulate, what is my elevator speech? How do I articulate my investment thesis? So from that perspective, then you can say, okay, here, these are a list of 15 to 20 investors I want to pursue. And I have worked on, in the Valley, I actually worked in Chicago for many years, for 20 years before I moved to the Valley about 6 years ago. So, for a couple of the companies, I really helped them to think through how to select the type of investors that could be interesting. One is for Ultra-P, which I helped them to do the Series A. And obviously we have gone through the list of the major investors, right? Series A investors, very, very successful ones. For example, A16Z, we have pitched. We have also gone through, the Bessemer's, the World, Menlo, and we have gone through like many Series A investors. And at the end, because they can't prove their TAM could be more than $10 billion. And these investors, that's the first question we ask, right? Because they provide security, digital communication to credit unions, and credit union is a limited market. It's a niche. But at the same time, it was very attractive to some of the private equity investors, early stage private equity investors. So they ended up signing up K1, which they have been very successful since. So don't limit yourself. You really need to understand that what is the market potential, what the TAM looks like, and what could be interesting to the investors, and then target investors properly. But when during early stage, as you start the investor pitch, you don't have to limit yourself. You could select investors from different markets or different types of investors and really just test your theory. Does it work? And as you rehearse, it also helps you to rehearse, because as you rehearse, you get better. You know how to answer questions, their hot buttons, and you know how to kind of tell your story fluently, and hit on highlights really, really well. So I think that rehearse, the multiple rounds with different investors will really help you to get better. I also led the Series C for Bird Eye a couple years ago at the end of 2021. It was really a great market timing because, we have finalized all the valuation by the end of 2021, and then the early part of 2022, that's when the market really got very volatile. So we're very lucky on that market timing perspective. So we also, at that point, when I joined the company, it was right coming out of the pandemic. And so the company had a big challenge in terms of growth rate. In 2021, people are talking about, if you talk to Tiger Global, they're like, okay. Oh, okay. So if you talk to Tiger Global, they would be like, no, 50, I'll talk to you when you're 50% growth rate, right? So so a lot of the investors are there looking for much higher growth rates. And Bird Eye was at about 25% growth rate at that point, but we were profitable. We were like 10% profitable. So then what kind of investor could be the best fit? So at that point, we really did a lot of research. And I also intuitively, I knew that it would be growth equity would be the best fit, right? So we kind of targeted 15 investors, and then at the end, we chose 3 very reputable ones, Excel KKR, Morgan Stanley, and Sixth Street. So all 3 of them are very reputable investors, and we were able to close. Let them compete, right? You want to speak to, the reason that you want to speak to many investors is because you also want to get multiple term sheets so you can compete on their terms and you can get the best valuation, best terms possible. So that level, that process, running that process, understanding the investors, having them providing you the optionality is always a great thing in finance, right? So, letting them provide you the options, and then you can get the best outcome possible. So then, investor presentation. I also going to talk about in the next stage, like some of the key considerations, but essentially the investor presentation is a combination of generally the CEO, founder CEO, they would be talking about what is their, what's their vision, the company story. If they led product, then you want them to talk through products and, all the product market fit and so on. And I always come in, like in all of these fundraising, I always come in to discuss from the financial perspective, what's the 3-year projection, what the company valuation we would expect, and, how some of the key drivers, the key metrics. So, those are my topics, right? So it's kind of a collaboration partnership. And oftentimes we also need to bring some of the key leaders to do that kind of presentation, right? If you have, the head of sales who has been doing really well, kind of be able to articulate from the customer perspective, that's helpful. The head of product could be also helpful. So all of those, whatever process that, especially some of the interested investors, they want to dive in deeper. So they want to talk to they want to talk to the management team. So that's where the whole investment team, the management team interaction is also helpful. For the earlier stage, when I worked on the Series A with Ultra P, it's just me and the founder. So we have gone through many, many rounds, like, late nights, weekend rehearsing. And essentially it was very well versed. He also led product. So it was very well versed on the business story. And I was able to kind of close the loop from the financial perspective and really have a sharp conversation with investor that, to really talk to what the things that they are interested in. And that's really critical. So, so I think, the overall investor presentation, you want to run, the sequencing, right? If you're thinking about these investors, you want to do research on them as much as they do research on you. So then you can figure out that who are the investors you are going to have the highest likelihood to win, the highest likelihood to be able to sign them up. And you want to put them on the later stage because at the beginning you are still raw. You need to practice. You need to kind of get better and be able to tell your story well. And then as you become very fluent in your story, and then be able to really articulate well, then you want to hit some of the heavy hitter. The later ones that you feel like has the most likelihood that you will be able to win. You also want to pace it. I remember that in some of my funding rounds that I was feeling that, okay, we have gone through a couple and it feels like the interest rate, the interest level were low. Then I want to kind of come back and think about what are the things I need to improve. Don't rush it, right? Because if you rush it and you feel like, okay, you have done the 2 to 3, you test the market, interest level is not quite there, then you need to understand why. You need to, figure out what could be the feedback. You could even have a conversation to have, to discuss with them about feedback. It really depending on our relationship. Next slide, I will talk about that, why it is so important to always keep, a strong relationship with all investors that you have ever interacted with. I think that relationship will give you, will really help you in the long run. Even they are not interested in this round, they will be able to give you feedback. They could be interested in the next round. And they could be able to introduce another investor who could be interested in your company. So that relationship building is really critical. In the past 3 years after our Series C, we don't really, Bird Eye is profitable, so we don't really need to raise another round. But I have monthly investor meetings with various investors. So that will help me to kind of build that relationship. And then down the road, some of them have connections with institutional funds, right? If we ever get a chance to go IPO, then that relationship will help us. So I think that relationship building is really critical. When you ideally get multiple term sheets, then you need to compare. You need to compare different term sheet and figure out the favorables and unfavorables, and then trying to figure out the puts and takes. One thing I want to caution, I think I also have that highlighted in the next slide, is one thing I want to caution is really leaving yourself the flexibility to be able to do future rounds. Generally, VCs are relatively straightforward. They don't really have a lot of limitations on the term sheet. Last round we had was growth equity, right? So they have a combination. That firm investor, they're like a 10 plus billion total asset under investment. So they have a combination of private equity, growth equity, and I think they also have a third that are like more of a takeover type of fund. So they are very stringent in terms of how to limit, because they want to have 3-year payback at a certain level. So they generally have more limitations, right? They want to kind of limit you. So be very careful on those terms, and be thoughtful to make sure that you have your future options open, or at least negotiate on those. So and then when you are, kind of reviewed all the term sheet, obviously with the legal team's help and so on, and you need to close. And then, that's when you kind of need to bring all of it together. Then go through the final due diligence process, which is quite involved. After you sign the term sheet, the financing is done. There is still generally a couple months of final due diligence work. So, make sure that you stay very high. It depends on the stage, right? Generally 2 months is probably for Series B plus, like, earlier stage could be much easier. But still, like, it is a process that you need to still continue to stay alert on what questions they're asking, what materials you send over. So continue building the credibility, right? Every single interaction is interaction. You need to build credibility. Any questions? I've talked a lot about different things in financing. Any questions? Yeah, go ahead.
It's excellent. I try to remember everything, but it's very hard. Some question. How much do the investors care about the business plan, or even, at the very beginning, they want to see your products back, requirements back, something like, do they? I hardly hear anything about the second part, but the first part of the business plan. How many of them would love to see that? Yeah.
So generally, if you talk about a business plan, right? Generally, in my mind, it is your planning for the next year, right? Is that the business plan for next year? The budgeting?
Okay, I'm not that good at it. That's why I'm asking, right? I would say this business plan is to plot out your roadmap as a company.
Product roadmap.
Yeah. Whole product, the whole company.
So they would absolutely. I mean, sound like this is more of an earlier stage, like the seed round, or they absolutely need to. They obviously you will need to know the detailed business plan, but they will need to know that from the high level. What is your vision? What is your product roadmap? What is your product roadmap? What is your kind of expectations on from the financial? How are you going to make money? Right. So some of these high level points you will need to be able to articulate.
So the pitch deck is it enough? That's what I mean. Is it enough, or they need follow up? Provide me your financial budget. our business plan before we move forward?
So, 我用中文说吧，我觉得好像您是中文比较方便一点。就是第一就是这个 investor pitch，就是这个 pitch deck，第一个 presentation。如果你就是基本上是比较 high level，因为这个一般这个 deck 是20到25页左右。那么你这个里头，你这个 deck 里头，你就会相对来说比较 high level，对吧？就是说你就是哪怕讲你的这个 product，或者是讲你的这个 financials，就是你的这个 projection 什么的，都是比较 high level。那么如果他有兴趣，他这个整个的这个 due diligence process 是比较长的，就是说，首先在他给你发 term sheet 之前，就会有一个 due diligence process，是 business due diligence，就是说，相当于他会 validate 你的所有这些 points，比如说你说这个 market 是怎么样，对吧？你的这个 market size，那么他要 validate 你是不是真的有这么多的 market，you know 是10 billion、50 billion，whatever you say，他会 validate。然后他会 validate 你的 product market fit，他会可能会打一些电话给你的这个 customers to understand your 那个就是你的这个产品的有效性，对吧？就是说他会 validate，就是这个他这个 business due diligence 所有的这个 validation 过程，就他会有跟你不只是这个第一个 presentation meeting，肯定会有 subsequent meeting。然后在这个 business due diligence 他觉得非常 solid 以后，他会给你一个 term sheet。那 term sheet 结束以后，他这个是有将近2个月的这个 financial due diligence，他要看的所有 financial statement，所有看你的所有的这个 audit，然后他要有这个 legal due diligence，他肯定有没有 legal risks，还有 tax due diligence，就是说你就是看这个公司的它的这个 stage，就是说它这个sign 了 term sheet 以后，还会有很多的这个 subsequent due diligence，所以就是您说的这个，就是说是多么的就什么有多少 detail。这个 investor generally 他们是会要很多的 detail before 他们投资的，对。
就是都是在那个 term sheet 的 finalize 之前。
term sheet finalize 是在那个就是说你这个 detailed business discussion 会在 term sheet finalize 之前，因为他要给你一个 price，这个 term sheet 他会告诉你我是10倍你的 revenue 还是 5倍你的 revenue，right？ 就是说他这个 multiple 是多少，他这个要 finalize 这个 term sheet 里头，所以他要对这个 business 感觉非常的 solid，对，还有其他的问题吗？好的，好的。我还是拿中文讲吧，我觉得好像是不是中文好一些？嗯，讲的这部分用英文，Q&A 用中文哈。So some of the key considerations, right? I talked about founder, CEO, compared, and the finance team. What's the type of collaboration? Generally, CFO is or you if you I'm not sure what the stages you guys are interested in or you guys are at, but generally the lead finance person will be you would say coordinate or leading. This person will be leading the whole process essentially. So from building the pitch deck, despite most of the content will come from various leaders, this lead finance person will need to manage the whole process to build a pitch deck. The primary reason is when it comes to investor interaction, it is very sensitive. All due diligence, all interactions with the investors will go through this finance person. The sensitivity comes in that they can ask a question and only very experienced finance person can thoroughly understand it and be able to interpret it in the way how other functions should come up with answers. So you'll be like, why? Like, if they ask a product question, why would the finance person will need to be the gatekeeper of, this type of interactions? it is very sensitive because, it really depends on, because the lead finance person needs to understand the sentiment of the investor and need to tweak answers or adjust the answers that either highlight, make it a lot more attractive, like in a way that fitting to what they are looking for, or because, for example, right, you could have multiple product offerings, but the particular investor is more interested in one or two product features. You ask the product person answer, they will give you like tons of data, like, then you kind of get lost, and the investor will get lost, like what exactly is interesting to me. So the finance person getting involved, understanding that intricacy, will be able to manage that communication a lot more effective. So, I know that some of these things that you wonder, like why there's so much sensitivity and why, like why would we need this lead finance person to lead? The experience is very important. Investors are a very sensitive bunch. So they ask one question, the implication could be another question. When you answer the question, not being thorough and thoughtful, when you send them a due diligence response that without doing thorough review, when you answer it the first time, they catch anything that's suspicious. The second time, your credibility is, it's just, you lose your credibility very, very quickly, especially the earlier you are, the faster you lose your credibility. So, that's why this relationship between, the partnership between the founder CEO and, the finance team and so on, like how they work together. If the company is very early stage, there's no finance team, find a person who can help you, right? Find an advisor, find a consultant who can help you, who understand the intricacies and be able to help you to, to maneuver during these interactions. Business model and due diligence, we talked about various things like how to build business models. It is, I built many models in different companies, or my team over time built after I started to lead teams. So there are some key considerations, right? You need to build models based on drivers. So what are the key drivers that defines your growth? You need to use those, because the reason that it's so important to identify drivers is that you need to, first of all, understand them thoroughly, right? As you build a business model, how the company make money, and what are the drivers will help you to continue grow your revenue. You have to thoroughly understand it because you need to articulate it to the investors. And you also need to use the same drivers to drive your business model. So those drivers need to flow into your business model, be able to explain that, okay, because, this XY increased by, double or triple, that's why my ARR, or that's why my revenue increase, triple or double, right? So that relationship, you need to show that clearly in your business model so you can articulate it with your investors, or, even leading your current team, like, the CEO need to understand, the business team need to understand, because then you will need to help to execute. You can't just say, okay, I'm going to grow, I'm going to double and triple on paper, and that's not going to work, right? Especially you're building the confidence. You say what you're going to do, and you do what you said. So that execution, continue building the confidence from investors is critical to the company's success. And that's why having very clear drivers and showing them the relationship between the growth and these drivers will not only help you to build confidence with your investors, but also will help your company execution. So that's, I can't emphasize enough of the business model, the importance of business model. When I was at GoGo, we built the revenue model. GoGo is in-flight internet company. Essentially, we provide internet services on the plane. So, for the commercial business, for commercial airlines, we have to measure. We first of all have to define different commercial airlines into different tiers. Certain tier airlines, certain high quality airline will attract high quality passengers, and those passengers will have more likelihood to buy. We also tiered by the flight length. So the longer the flight, the more user or passenger will buy. So there are like 3 or 4 drivers, and we built the model so thoroughly that we were within 3% of accuracy. Every year we were able to project our revenue within 3%. When the company went public, I worked with Morgan Stanley, JP Morgan, and the Goldman Sachs helped us with one round of debt financing. So worked with all the top investment banks, and they all raved about our business model. So building an accurate business model, be able to guide your business, be able to project your business really, really well is critical as you build your business. Due diligence, I think I talked about that quite a bit. Like, the sensitivity on due diligence, like why the finance leader need to lead this whole process, and be very careful when they send you a question, how you interpret that question, how you answer that question precisely. Only send them the minimum content possible to explain, to answer that question. Don't oversend. Don't give them like a bunch. Oh, here, go plow through this data. So, let me know what you find. That's a disaster for the financing process. So you send them the minimum amount of content, let them go through. Hopefully that specific question is answered. If they have additional questions, let them ask additional questions. So just be very careful in sending, the lead finance person has to scrutinize every single content being sent to the investors to make sure that the communication is fully buttoned up. Investor interactions, we talked about like some of these difference, right? What is their decision criteria? For example, Series A. So generally, Series A, they want to see, so different stages, there's different decision criteria. In certain cases, it's profitability. In certain cases, the product market fit. They want to see validation of customers, and so on and so forth, right? So you need to understand. And it's very interesting that, when I did Series B for Kites, after that financing, we were able to sign up one investor, but the whole financing process was not as successful as I'd like it to be. So I called every single investor and asked them why, like what it was your decision that you didn't invest in us. And the answer was miraculously all very, very similar. They all trying to find a box. They all say that, okay, I want to see your magic number 0.75. I want your LTV to CAC at 3, so on and so forth, like very, very similar. I want to see your growth rate at whatever range, like maybe minor differences. So when it comes to venture capital investment, they are, each of the stage, they are, obviously there are cases that they probably will make an exception. Like they really love the founder, they really love the idea, they really love the product, they really feel like the first few customers are so outstanding. But generally they have a box and they're trying to make sure that you stay within that box. So understand that box with your eyes wide open when you go into that process would be my advice. Consistency and predictability generally is a much later stage, right? Especially when you trying to get to prepare to be a public company. I think that's probably a bit it's probably a topic that this a bit further for this group. So I'm gonna just skip that one. And I think I talked to some degree about credibility, building credibility every step of the way. You are winning your investor every single interaction, even they become your investor, because we have board members, right? They have been our investors for years. We're still trying to continue proving that we are able to deliver. We set a plan, we're able to deliver our plan, we're able to execute. So all of these, credibility building is really critical. And then just always building relationships with any investors you come to interaction with, right? Even they say that, okay, thank you very much, appreciate your presentation. We're not interested. Have a conversation with them why they're not interested, understand that what kind of criteria, what is their box looks like, and continue ping them as you continue to develop your company, continue building your company. I think that relationship will go a long way. I think some of these I also touched on. I don't want to bore you, continue repeating. So the legal support and so on. I think we touched on in the prior slide. This is the last slide. Any questions? Any additional questions?
During the whole processing, what is the most challenging part to you?
What is the most challenging?
Yeah, I think during the whole processing when you're funding the money, what is the most challenging steps you face?
So I think a lot of times you will know. I think just, when you start a funding process, right, financing process, I think you first of all need to know the market. You need to know whether you're ready or not. I think that judgment is as critical as you start this, kind of go through this process. This judgment of, is the market ready? Am I fitting into their sweet spot, right? For this type of investor, am I fitting into their sweet spot? Like for venture, am I fitting into the sweet spot for private equity? Am I fitting the sweet spot of growth equity and so on and so forth? So understand that, I think, is a critical first step. I think it's pretty hard because when I see some of the companies, it's lucky that we haven't really gone through a process that we were not able to raise. But I have seen many cases, even my current company, like I think the last round when they were trying to raise Series C, they were not successful. So I think the judgment on, are you ready? Is the market ready? Like, do you think that you have 75% chance be able to raise? I think that kind of understanding is really critical. I think that is the first hurdle, that's, whether you feel like you're ready or not. And then through the process, I would say, I don't really know how to say. I mean, generally, after you get term sheets, then yeah, that you will be able to raise, right? And you can't really relax before everything get closed, because there could be challenges that during due diligence, which I also have seen in the past, due diligence, operational, financial, legal, some of these due diligence after you sign term sheet could just fall through. So that could happen as well. But I think generally every step of the way are as critical as as any other steps. I can't really pick, like, is it more important in selecting investors versus presentation? Well, if you don't select the right types of investors, if they don't really value the type of business you are, right? If, for example, when I do our last round of fundraise, if I only selected venture capital, I think it would not go anywhere. At that point, at the end of 2021, it was still high growth was the primary decision. Like, it was the primary decision maker. It's not growth and profitability. Obviously, market had changed drastically since, right? Now you say 25% growth rate is awesome. But 2021, the end of 2021, it's not what the ventures are looking for. So you need to understand and really figure out and select the right investors. And then pitch deck is critical, because that messaging, how do you describe the company, the messaging is important. And then the whole discussion from the presentation perspective and from the negotiation on get the term sheet, and then from negotiation of the term sheet. It's all investors also need to be pushed. As much as you try to get money from them, you also need to know what are their hot buttons. they don't like to hear that another investor is interested. So then when you tell them, you would be able to push them to manage the timeline. Managing at a very contained timeline to be able to get a process completed is really important.
It's not more investor will build up the confidence that this is a good product, will attract more investor. It's opposite. When you have one investor, the other investor kind of sensitive. They don't like to have too many other investors putting into their money into the business.
No, they don't. When in the same funding round, they don't. When they did enough business due diligence, they are interested. They don't want to hear. When they hear, they're very sensitive. When they hear that there's another investor is ready to put in money, then they don't like the competition, right? They want to win. So then you can push them to act faster. You have to, that's why it's helpful to have multiple investors to send in term sheet. But not only you can negotiate, you also add pressure so they can respond to you faster. I love to play that game, like, have multiple investors and negotiate with each one of them and have them respond and have them, kind of guide them to the way that where you want to end.
Like same as the real estate market.
Exactly. When you have multiple offers to bid a house, then the seller definitely have much more market power. Yeah, same thing. Yeah.
Thank you for the presentation. Very helpful. My question is, during the due diligence phase, different investors, are they able to connect and exchange information, or you're one-on-one interacting with them?
No. You have to manage with a lot of sensitivity that each investor only interact with you. You cannot tell investor A that I'm talking to investor B, C, D. No. There's so much sensitivity to manage even when you got term sheet from multiple investors, you still don't tell who you got your term sheet from. You will say, I have 2 more offers. Like if you have 3 total offers, right? You will tell one investor, say, I have 2 more offers, and this is the range they gave us. You would never release the investor names to other investors. There's a lot of sensitivity on that. Yeah. Yeah, go ahead. 我们可以用中文说。可以。我是想问一下，如果是一个项目如果要取得，谢谢。就一个项目要在美国能够更好的争取投资人的话，是不是团队当中应该有加入能够有白人，他们或者是其他印度人、其他人种的参加团队当中的话，是不是更好能够拿到融资？我觉得可能就说，如果你能和投资人正常的交流，就是比如说比较深度的交流，因为他这个就是这个语言方面呢，就是因为它是非常的 sensitive， 就是说非常的敏感，很多如果你听他这个问题，你不能完全会意的话，那这个就是对这个融资的整个这个过程会有影响。所以只要是你能我觉得这个总体来说，如果这个技术、产品、市场就整个的这个 business case 很强的话，我觉得不一定非要有很多其他的，就是其他这个 race 的人吧。我觉得这个可能不是很重要，但是我觉得这个在交流方面是很重要。你需要，或者你可以有一个 advisor 可以帮助你，或者是就是你要这个交流的这个过程是比较重要。对，而且他们也需要就是有 confidence， 对吧？就是他们如果听到你们的，因为如果这个 invest 的话，他们可能会 sit on the board， 他们可能是你的董事会，那么他们要能 就是你要开董事会的话，他们要能听得懂，对吧？要能那个理解，就是说这个产品的走向啊，或者是这个从那个报表啊什么各方面，他们要就是有感觉，这个能够给他们一定的透明度，他们才可以投资。所以这方面也要需要考虑一下，对吗？
谢谢你今天的分享。我有个问题就是，就作为一个 CFO 啊，你怎么来决定，就是说一个公司它到底需不需要去融资，以及在融资的时候，它应该去拿这种 VC 的钱啊，还是说去融债，还是说它应该去做 IPO，还是说它应该去接受一个 acquisition 这种 offer？
就是这个融资，什么时候该融资，为什么要融资？有的时候不一定是说你就是马上就没有钱了，你才融资。因为我们当时我们是2021年融资的时候，我们是 cash flow positive，我们也有足够的钱，但是当时所有我们的 competition 都在融资，或者是在上市，所以的话就是说你要从这个竞争的角度必须要融资。就是说，有的时候是由市场决定的，有的时候是大部分时间是因为根据 financial 来决定的。就是说，你是不是，比如说，一般你融资可以 carry 12个月左右，对吧？12到18个月，这是一般的这 VC investor 的 expectation。你应该融资一次，你应该能够支持18个月左右。这样的话呢，就是你可以 get ready for 下一轮，对吧？就是说，因为你要融资这个每一个 stage 之间要有一个 milestone，你不是说就是这个月融完了，6个月以后再接着融，一般这个 investor 会很 suspicious，就是说，而且有的时候为什么我觉得刚才我说那个就是要 assess 你是不是 ready，因为你要是没有 ready，你去融资 failure 会影响你下一次融资。比如说你在1年之内，你有一次融资，你见了所有的这些 investor，因为你这个 pool 就这么些，对吧？就是这些 investor 就这么，这个 VC well known VC 就这些。你比如说你见他们一次，然后你们没有 ready，他们这个大家就是这个没有融资成功，那么在12个月之内，你再回去跟他们再跳这个 story，他们就会问你为什么上一次，对你上次跟我讲的这个 story 是这样的，你现在你变了那个 story，我为什么要相信你，对不对？就是说他这个 scrutiny 会 a lot harder，所以就要很小心。然后是要怎么样，要融什么，就说什么是这个 IPO 是一个现在坎儿很高啊，我不知道你们是不是 follow，它这个至少要300-400个 million 吧 revenue，然后要 profitable 啊什么的，现在坎儿很高。但是我想就是希望这个 market 这个相对来说稳定了以后，可能会在这个又慢慢的落下来，因为就是在这个2022年之前，他就那些就是那个 market open 的太厉害了，有很多的 spec，有很多就完全没有 ready 的，但是也都冲上去了，所以他可能这个市场经过了那个冲击，现在非常非常的 careful，所以这个 IPO 我觉得不是一般的公司可以做的，现在，而且这个 IPO market 现在还不是特别的 warm，还是在 transition 吧。debt 和 equity 的话，我觉得刚才就是在讲，就是说，如果是 early stage venture debt，应该是 interest rate 还是蛮 manageable。那么就是它是帮着你在不同的 stage 之间来 bridge，所以那你就要想一下，就是因为很多时候你在找 investor 的时候，不只是为了钱，不只是为了说哦，我需要这个 funding，它可以帮助我们就是投资这个市场，投资产品。有的时候也是你在找一个 partner，就是你要为什么大家都想要找 reputable VC，right？因为他们 network 很广，他们不仅能够帮助你打市场，还可以帮助你找 talent，它可以帮着你 hire 你的 key C-level positions。就是说这个它的那个 network 非常的广，它的那个 capability 非常的广，help you strategic thinking. How do you plan for your strategy, right? How do you plan for your execution? 所有这些都是会增加这个公司的成功度，尤其是你非常 early stage, right? There's a lot of different directions to go. 所以他们都非常 experienced，然后有一些好一点的 VC，他们都有 operating partner，就像比如说 A16Z，他们有 operating partner 帮助你怎么样做 sales，怎么样做 operations，怎么样做 product，他们有很多 advisor，就是说这个成功率会很高，所以就是说这些都是那个考虑的因素。不过我很愿意，就是如果你有仔细就比较详细的问题的话，我也很愿意去帮你看一下。对，好的很。
那
是不是时间差不多了？
就是线上还有没有问题？大家还有什么问题吗？我们最后再一个问题。
然后他的刚才的 explanation 就 follow 你刚才的解释哈，就是有些刚刚有 technology 的 person 他放了一个公司，可是后来 venture money 进来以后，反而把他 kick 走了，他们 take over control of the company。你的看法是什么？假如你不会保护自己，还是不会 play political 这种东西？
对，我觉得这种，就是一般就是怎么说呢？就是你要决定你是做多久的 bootstrapping，然后就说自己犯的多久，然后你开始融资。这个什么时候你开始做第一轮融资？因为越早，你要是就是 seek for investment，就是越早你要融资的话，那么你有可能他用很少的钱就会拿到很大的 percentage ownership，right？就是 seed level。我觉得可能 seed level 差不多，我现在没有怎么做过 seed level，我想可能差不多20%左右吧。那么 Series A 一般是10%到15%，所以就是说，这个你越早做这个融资，你就会 give up more ownership，就是说这是一个考虑因素。那么，我觉得 venture 这个 term 都相对来说是比较 relaxed 的，他们可能一般不是会 aim at takeover。这个比较 strong 的 takeover 的 case 有可能就是 private equity，他们一般首先他们有的是不做 minority investment，他们只做51%以上的 investment。那么如果这个公司不 perform， 或者是有些什么 criteria 你不能 meet 的话，有可能他们就会 take over。所以这个 private equity 就是要非常的小心，这方面要非常小心，而且他们又更多的时候就是他们的 style 是 control。所以这个就是这个 balance， 就是一般 venture 是给这个 venture capital 一般给 management team 更多的 flexibility， 他就会就是说就是他当然会 advise， 但是他希望你就是有一个很强的 growth， 但是 private equity 他希望你 operating really well， 他希望你这个就说这个 revenue growth 如果做不上去的话，他要 protect 这个 bottom line。所以他要可能比如说要 cut cost 啊，要做什么，但是他这个 control 是很强的。一般这 private equity firm 他要跟你有 monthly financial review， 他们这个就是要 stay very very hands on。
所以 the intent is different。
intent 是 different， 这样不同的 investor intent 是 different。
今天讲的